Nvidia shares are poised to open at an all-time high on Thursday, surpassing the $1,000 mark for the first time in the company's history, following the release of stronger-than-expected fiscal first-quarter earnings. The Santa Clara, California-based chipmaker, Nvidia, reported a record bottom line of $6.12 per share on revenue of $26 billion. This stellar performance was primarily driven by the accelerating demand for its H100 and H200 AI Hopper chips. Data center sales, which include Nvidia's key AI offerings, surged 427% year-over-year to a record $22.6 billion, with the group's gross margin expanding to 78.9%. Importantly, Nvidia projected current quarter revenue to rise to around $28 billion, with a 2% margin for error. This optimistic outlook is particularly notable given that the company indicated its new Blackwell system of processors and software would not start shipping until the second half of the year. Analysts had expressed concerns about a potential revenue gap between the current H100 chips and the upcoming Blackwell offering, fearing that customers might delay orders for the older chips while awaiting the new system. However, Nvidia CEO Jensen Huang reassured investors during a conference call that clients could easily transition from H100 to H200 to B100, emphasizing that Blackwell systems are designed to be backwards compatible. Huang elaborated on the Blackwell revenue forecast, stating that significant revenue from Blackwell is expected this year. He mentioned that production has already been underway for a while, with shipments slated to begin in the second quarter and ramp up in the third quarter. Huang also projected that customers would have their data centers operational by the fourth quarter, reinforcing confidence in Nvidia's revenue stream continuity. Following these updates, several analysts have revised their price targets for Nvidia, reflecting their enhanced confidence in the company's growth trajectory. Cantor Fitzgerald analyst C.J. Muse, for instance, raised his price target to $1,400, marking a $200 increase and the highest on Wall Street. Muse rates the stock as overweight and pointed out that Huang's comments regarding the Blackwell system were a crucial takeaway from the earnings call. He also highlighted that the demand for Hopper chips continues to exceed supply despite reduced lead times, indicating robust and sustained market demand. In his analysis, Muse emphasized that the key point from Nvidia's earnings report is that there will be no significant revenue gap in data center sales. He projected clear sequential revenue growth through the October and January quarters, driven by the continued high demand for Nvidia's AI chips and the seamless transition to the new Blackwell system. Muse's revised price target and bullish outlook reflect a strong belief in Nvidia's strategic execution and market positioning. Other analysts have echoed Muse's positive sentiment, noting that Nvidia's ability to consistently exceed market expectations and its strategic positioning in the AI and data center markets bode well for its long-term growth. The absence of a revenue dip during the transition between chip generations underscores the company's effective management and strong customer relationships. For instance, analysts from Morgan Stanley and Goldman Sachs also raised their price targets, highlighting Nvidia's robust demand environment and its strategic foresight in addressing potential supply chain disruptions. They praised the company's agility in managing production timelines and ensuring backward compatibility of its new product lines, which mitigates risks associated with technological transitions. Nvidia's strategic focus on AI and data center solutions, coupled with its innovative product pipeline, positions it well to capitalize on the burgeoning demand in these sectors. The company's performance and future projections reflect a robust growth narrative, which is further supported by the analysts' revised price targets and their bullish outlook. Moreover, the broader market trends favor Nvidia's core business segments. The exponential growth in data generation and the increasing adoption of AI across industries such as healthcare, finance, automotive, and retail amplify the demand for high-performance computing solutions. Nvidia's leadership in GPU technology and its expanding ecosystem of AI and machine learning tools position it as a pivotal player in this transformative landscape. Nvidia's recent strategic moves, including partnerships with leading cloud service providers and advancements in AI software, further strengthen its competitive edge. The company's investment in research and development, aimed at enhancing the performance and efficiency of its AI chips, underscores its commitment to maintaining technological leadership. Additionally, Nvidia's focus on expanding its addressable market through innovations in autonomous vehicles, edge computing, and 5G infrastructure presents significant growth opportunities. As Nvidia continues to navigate the dynamic technology landscape, its strong financial performance, strategic product transitions, and forward-looking revenue projections suggest a sustained trajectory of growth and market leadership. This positions Nvidia not only to meet but potentially exceed future market expectations, driving continued investor confidence and stock price appreciation. Furthermore, the company's commitment to sustainability and corporate social responsibility resonates with the increasing emphasis on ESG, environmental, social, and governance criteria among investors. Nvidia's initiatives in reducing carbon emissions, promoting diversity and inclusion, and ethical AI development align with global sustainability goals, enhancing its appeal to socially conscious investors. In summary, Nvidia's latest earnings report and the ensuing analyst reactions highlight a company at the forefront of technological innovation and market expansion. The robust demand for its AI chips, strategic product transitions, and promising revenue forecasts paint a compelling picture of sustained growth and market dominance. As Nvidia continues to lead in AI and data center technologies, it remains well-positioned to capitalize on emerging trends and drive significant shareholder value in the years to come.